Okay, everyone. Welcome to this edition of the Financial Freedom Friday. We're actually streaming this on the Sawduster Society, but since we're talking about a financial topic, I thought it would actually be pretty good to stream this on Financial Anatomy as well. So right before we get started, I got to ask y'all, if y'all can give this video a thumbs up for the YouTube algorithm. It'd be greatly appreciated. By popular demand, we brought the Financial Freedom Friday back. Yeah, I know I took a hiatus from doing it last year because of the YouTube traffic glitch. And I had people walking up to me saying, "Hey, can you start it back up?" That's great. And I actually have somewhere to go right after this. So I am giving up my Fridays to do this. So if you can give a thumbs up, very much appreciate it. And if you want to hit that super chat, I'm not going to argue with you. But with that being said, we're going to be talking about day trading, which I'm going to be honest, I don't have that much experience in day trading myself. That's why I have a guest that's going to be breaking down day trading because she has a lot more experience than I do. Her name is Julie Garrison, and she's actually a veggie artist. So for some of you veggie artists that are listening, we have one of us that's on here, but she has a lot more experience day trading than me. I'm the typical, when I'm looking at investing, I'm the dollar cost averager type investing in blue chip stocks, growth stocks. But as far as the day trading aspect, not too much experience. So I think that this can provide great value for y'all. So I'm going to stop rambling and bring her on the stream. Julie, can you hear me?
Yes, I can. Hi, how's everyone doing today?
Well, hopefully everyone is doing pretty well. I'm doing pretty well myself. I kind of hope I'm not going to argue too much with the weather, but I think I'm kind of over the winter. How about you? You over the winter?
Yes, actually, tomorrow I am taking a 7-day cruise into the Caribbean. So I'm out of here for at least a week. So we should be getting some good weather here in the next week or so.
Okay. Well, you made sure. Well, you're guaranteed good weather. Then you couldn't wait for the weather to change. You got to get up out of here. I'm not
Well,
mad at you.
that's true. I'm a scuba diver, so I love to dive with sharks when I dive, and also in the market. I'm with sharks all the time. So
Well, do you're probably gonna end up on Shark Tank at some point, right?
Oh, I don't know if I have anything to offer that, but you never know. I'm always, just like you're a hustler. Everybody's a hustler. You never know. I might have another path where I that would be great.
Hmm.
I'll accept that. Yep.
Okay. So I do want to tell everyone that at any point, if y'all have any questions or comments, y'all can leave them in the comment section, and towards the end, we'll be sure to address any questions as we go. But Julie, for those of y'all that, and I remember you mentioned that you had a pen name too. Do you want to shout that out?
Yes, I'm Electric Kate. So I long story of how I came up with it, but some people call me, my name is Julie, but a lot of people in the trading industry call me Kate, and Electric Kate just stuck. So yeah, so ELEC, electric with the C, and then KATE. So, and I'm sure you'll be dropping my my tree in the chat later on after the show. So all my information's there. Where you can follow me, etc. But I'm super excited to be here today to talk about trading and my path. And I'm a little nervous. This is my first interview. So, and then, to go like after Theo Derringer, that's like a real honor. So I really appreciate you having me on the show today.
Sure. Well, I couldn't tell this your first time. I mean, you're doing pretty well in my opinion. Great composer.
Thank
But
you. It's been
I know,
a hot minute since I've been in corporate America. I think it's been 4 years. So I left 4 years ago. So it's been a while since I have had a stage presence.
okay. That actually is going to tie kind of into your origin story, but let's go from the novice perspective. Let's say someone is just green when it comes to investments in general. What exactly is day trading? Like, how would you define that?
So there are three types of day traders. There is a scalper or a sniper, and basically they are in the
Ooh.
market anywhere between seconds to maybe 5 to 20 minutes. Okay. Then you have an intraday day trader who basically looks for intraday moves. So that could be anywhere from, let's say, when the market opens 8:30, 8:40, and they can stay in the market anywhere from a couple of hours to all day. Like today, the NASDAQ dropped, I believe, 700 points. I stayed in, 300 points on that downtrend. There are a lot of people. I went to go play pickleball after the fact, but I heard that the market went down even more. And then you have swing traders. They stay in anywhere from a day to a year. One of my mentors, Lee Allen, she stayed in the NASDAQ for over a year. And that's crazy. So it just depends on your personality. Some people, so I'm a sniper. Some people, it makes their stomach turn to say, oh my goodness, you're in the market for a minute, you're in the market for 5 minutes. That's just crazy. But it makes my stomach turn when somebody holds a trade over the weekend because, news, either the political geo environment can go crazy and you're in the market, and Sunday when futures opens, you have no control over what happens to that because the geopolitical news, a war breaks out or, there's peace. You just never know what's going to happen. So that kind of, I like to be out of the market at least by end of day.
It's an interesting perspective because I would say that the comment you said, it is no more appropriate to say it now than ever in history, in my opinion, given the president that we have. I mean, Trump could say something off the wall and it affects the stock market crazy for better or for worse. And your mind is free of all that because you're not in it that long. When you say,
well, yes and no. With the last administration, you really didn't have to pay close to news as much. Yeah, you have news in the background, I think it was CPI hit today, the interest rate hit today, or FOMC meeting minutes. That's like the Super Bowl for me. I love FOMC when our friend Powell comes up and speaks. One of my favorite times in the market. But what the current administration is, you really have to have something on in the background that tells you what is happening in real time. I listen to Schwab Network sometimes, and they're even about 5 minutes behind of what happens in the market. So you really have to be really tuned in. You probably need to be on X, or another social media site if you want to be current with today's administration, because if the current administration says something, it can impact the market hundreds of points to the upside or the downside, and you just might be on the wrong side of the trade, right? Or the right side of the trade. So you really have to know the landscape that you're working in as a trader.
interesting. So you pointed out you mentioned X in particular. Is there a reason you recommend that you should probably be on X in that regard versus the other social medias like Facebook or even LinkedIn? Or does it hurt to be on all of them? Or is really being on X, is there a certain reason you're recommending being on X?
Well, I think specifically for news that comes out relative to the current administration, I know that I'm not a follower of Truth Social, but I know that Elon Musk and some of the other people, they post on X, and it can, with the current political landscape, it can impact trades, especially for a day trader. So it's very important to have your news on in the background, at least during this administration. Last administration, you really didn't need a news media outlet other than, the Forex Factory is one of them that I use, and also investing.com. That's one of ones that I use every day. And as a new day trader, that should be, you have rules and a playbook. I don't like to call them rules. I like to call them a trading path because I hate rules. So anyway, that's one of my things that I do every morning before I go to the charts. I look to see what news is playing out. Like consumer sentiment was today, coupled with, I believe it was PMI. And then you've got to know what's going on, because those data points, they can either shift the market. Like yesterday, it shifted the market 200 points, and then it came back, right? So that was just what we would call a liquidity grab. But today, it shifted it a couple of hundred points, and I was done for the day. I was super happy, grateful, the amount of money I made, and I'm like, okay, I'm done. I'm usually done by 10:30 in the morning, and got a phone call and said, did you see the additional 400 point drop? Well, no. So that news that happened at, I believe it was 8:45 today, that really impacted the whole entire day.
Gotcha. Okay. So like kind of pulling back to one thing you were getting into closer to the beginning of the show. You mentioned that you used to be in corporate America. So how did you become a day trader? Like you want to go into your path of from being in corporate America to where you are today, which is day trading?
Absolutely. So I think it's important. I come from a very blue collar family background. Both of my parents have high school education, hardworking. We were taught you put your nose down and you work, and when you come out of it, you'll be better, right? I'm the first person in my family to have a higher education degree, and I'm really not that smart. My IQ is not, so I'm average, right? And I'm telling you all this because I will get to a point later on. But I started with a Fortune 25 company, UPS. I think everybody's worked for UPS in their career, right? Or in college, and it got me through school, and they taught me resilience and grit, and I was at UPS for 28 years. I was at various companies within UPS, so I didn't have the same job. I would say half of my career was industrial engineering, and then the other half was sales, right? And I tried to leave a couple of times, but life events happened, or not life events, but like geopolitical events, like the dot-com burst. You're probably a little too young for that, but the dot-com
I'm familiar with it, but yeah.
Right. 2008 market crash, 9/11, COVID, right? Most recently. And every time I thought about putting out my CV or my resume, life happened, and then I would get promoted, and then I was happy with I was content, right? Great company to work, great people, have friends there still today. But I just became constructively dissatisfied with, am I as a person, as my, do I have enough what it takes to leave the brand? Because UPS has a great brand. Do I have enough to leave and do my own thing? And it always haunted me in the back of my mind, because I was at that company from when I started in college. So I really felt like, do I really have what it takes to do something on my own? And then my dad, shout out to my dad, he said, you really need to try this day trading thing, right? He's dabbled in it, and he goes, I really think you'd be good at it. And really all I can't think of the word. Investment was just, yes, I got stopped, right? That's all, 401k and everything. So I started looking at it, and I thought to myself, you know what? I really love it. I love the analytics. So you have two types of traders. You have a technical analysis day trader that looks at, you can put your thumb over a stock, and I got a thumbs up emoji. Thank you. You can put your thumb over a stock, and I can tell you with certainty what the stock, or a probability, what the stock's going to do. Doesn't matter what stock. what investment, right? Based on the technical analysis, and there's different analyses. And then you have fundamental analysis traders, such as, like, for example, if we use Apple, for example, oh, Apple's coming out with a new iPhone. Oh, the stocks went up, or their iPhone sales are slow. Oh, it went down. So that's more of a fundamental trading way, right? And I find myself, after this 4 years, I actually do both, right? I look at the fundamentals, but I really look at technical analysis. So I basically thought to myself, you know what? If I can replace my income after a year, I'm gonna take a leap. I mean, I think everybody, huh?
Take a leap of faith.
Yeah, take a leap of faith, because I think everybody remembers during COVID, because I left in January of 2021, and I said, you know what, I I I really want to see if I can do something for myself, right? It's not about how much money you make; it's the lifestyle, the freedom. I think the freedom is so important, and if I can, like I was telling you before the call, if I can convince the people that watch your channel to become a day trader or stay away from it, because honestly, it is the hardest thing I have ever done in my entire life, to go from a monthly paycheck you get paid out on the 26th of every month, and basically going to a zero-sum game. There are people on the other side of that computer that want to take your money. I am one of those people on the other side of the computer that wants to take Elijah's money, right? And when you understand that, it really puts it in perspective. And what I think I would have wanted somebody tell me, because I am a self-taught trader, I didn't know that there were channels that you could be a part of, or mentors, or books you could read. I just thought, okay, I'm going to start, buying and selling Coinbase and Tesla and Nvidia, and I'm just going to, do this, and do some free education on Schwab, and boy, I learned some really bad habits. Not putting in stop losses, over leveraging, holding on to a trade. So it's kind of like you're at the European, I lived in Europe for a little bit while I went to university over there, and it's like getting on a train and you're trying to go to Madrid, Spain from the Netherlands, and you realize you're on the train to Italy. Well, what do? Do you go all the way to Italy before you get off the train to go all the way back to Spain? No. You get off on the first stop and you turn it around. Day trading is trading. I don't want to say day trading. Investments or day trading is just like that. You realize that you're wrong. Your markup could have been so right. And this goes for investing too. Your markup could be spot on, but the market is going to do what the market's going to do. And if the probability doesn't work out in your favor, you get out and you go the other direction, and you take the loss. So one of my online mentors, Tom Hugard, he is a renowned trader. He wrote The Best Loser Wins. And if I was sitting on the other side of this channel listening, the two, or probably the three books that I would read before I'd even get started in it would be The Best Loser Wins by Tom Hugard, One Good Trade. His name escapes me on who wrote that book right now. It's called One Good Trade. It's a great book. He owns S&B Capital. And then also Trading in the Zone by Mark Douglas. Those are the three books that I would read if I was starting from scratch, like your viewers today, because it can save a lot of financial pain, emotional pain, and psychological pain by doing that.
Is this the book that you're referring to?
Yes.
For people that want to know the author.
Yeah. What's his name again?
His name is Mike Belforino.
Belfort. Yeah. Belfort. It's Belfort. It's Belfort. Yeah. His name just escaped me, but
okay.
Yeah. And being like The Best Loser with Tom Hugard would probably be my first book I would read. and then one good trade. And then if you decide to pick up trading, get the audiobook for Mark Douglas's Trading in the Zone. But these are the things I didn't know. And so like I told you today, I'm here to give back to the community. And if I can prevent someone to being a trader, because you
It
have
takes a level of emotional stability to be a trader.
absolutely. It's not about being smart. I prove that, right? It's about tenacity. It's about emotional regulation. And I say it, when you become a new trader, everybody thinks, oh, it's about technical analysis. 80% technical analysis, 20% discipline, emotions, and psychology. It's the opposite. It's 80, 90% emotions, discipline, and psychology. And if you don't have those things, you will lose in the market. And that doesn't matter if you're a day trader or you're an investor, you will lose.
Mm-hmm. Yeah. Wasn't it the phrase that Warren Buffett said, arguably the world's greatest investor, be fearful when those are greedy and be greedy when those are fearful?
Absolutely. On the former channel that I taught an investment and options class based on fundamentals of Warren Buffett, and that's what he said. When it feels like everybody's drunk and like high, oh, market's great. That's when you're fearful, right? There's a reason why Buffett actually took off a lot of his Coca-Cola and his Apple stocks. It wasn't that they were doing poorly. It was that they're at an all-time high and they have to retrace, right? The market loves to go back to, as you would say, well, as we would say, a pivot zone, right? It loves to go back to a number. So he was taking advantage of how high it went, and he put cash on the side to actually, yeah, I bet he loved today and he's looking for it to go a lot more down so he can buy some more, because you want a lot of cash on the sidelines when something like this happens, like today did.
Gotcha. We have a few comments. I'm gonna throw a few of them on the screen. You have a
Okay.
shout out from Lisa. She says, "Thank you for sharing, Julie. Great stuff." And we have a comment from Tony. Says, "Hi, Tony Garrison here. No relation, but did work with Julie. Have you considered day trading with options? Less risk on the amount of money that is used, but higher return."
Hey, Tony, I'm so glad you joined the call. Thank you so much. Yeah, and no relation. I think there's a relation. I think our great grandparents were cousins or something. But anyway, I've known Tony for a lot of years. Yeah, I actually do trade options. The thing about, you can do put and if you're using your own money. I personally don't use my own money anymore. For day trading, I do investments only. But when I do investments, I do covered calls. So, and you actually can do a covered call on UPS and make some really good money. But anyway, another topic for another day. Reach out to me. We'll chat about it. But yeah, you can actually do covered calls on different stocks. You have to know whether they are weekly options or monthly options. I actually prefer the weekly options if you really want to make money. And it really depends on what you're trying to achieve. If you're trying to achieve where you're getting an income and it has a dividend, the option play, there's still option plays out there. But like if you wanted to make a high yield return on options, you're looking more in like the high tech sector. So I used to do options. I used to roll options on Nvidia, Tesla, Coinbase, things like that, to get a lot of high yield. But from a smaller perspective, if you wanted to do it from an options perspective, from a an earnings play, you can still make money. So I remember I taught my friend how to do options, and I stopped doing them for a while. I'm not sure why. Just lost interest.
Wanted to try something new, baby?
Right. But the really cool thing was he reminded me, even if you get $10 on a stock that an option, let's say it's a very low option, like they're only offering $10 a week. And I'm like, whoop-de-doo, $10 a week. He reminded me, Julie, if you can roll that every week, that's 500, there's 52 weeks in a year. That's $520 that you're making on that one stock. If you're looking to, make some income on that. So options is definitely a play on that. You can do that.
You brought up an interesting point. So a lot of people see trading and investing in two different categories, and ultimately, I guess you could say that. So when you mentioned that if you're looking for income from dividends, some people will automatically think, okay, what does that have to do with trading? Because if I'm looking to invest in this company, so I can receive quarterly or semi-annual, or sometimes there are some companies that pay
Monthly.
monthly dividends.
That is
But yeah,
correct.
if I'm looking for that, how would that tie in with needing to know more about options and using straddles and stuff like that? People think they're in two different categories. So when you mix those two, could you dive more into that? Like, are they in separate categories, or is it relevant to be talking about them at the same time?
I see them as one. I think the only difference is the timeline. So as a trader or as an investor, you really need to understand what are your goals. What is your why? Right? You really have got to understand that, because if you are 65 years old, 70 years old and retiring, and you just want a steady income, right? That's going to be different than a 20-year-old that's looking to have a growth in their portfolio. So it really depends on what you're looking for. And that's going to be different for each person, not necessarily it's the same trading path, but it's different from what you're looking for, versus I'm looking for uh, if I'm doing options and I'm looking for a quick growth strategy. I'm not going to go for the 20 to $50 stocks, because they're options. They don't offer great options, versus I had Nvidia at 176, and rolling 100 shares of Nvidia every week earned me $1,000 to $3,000 depending on the strike price. So it really
Mhm.
depends what you're looking for as a trader. But I don't separate that out. I think why people do that is there is a perception, and I'll just come out and say it. There's a perception that day traders are gamblers, right? And I think anything in life is a gamble, but I think that from a day trading perspective, it becomes gambling if you don't follow your trading path. You don't put on stop losses. And this is for investing too. You don't put stop losses. You over leverage. You don't get off the train when it's not going your direction, that you're like, "Oh, well, I'm not going to get off because it's got to come back. The stock's got to come back," right?
You don't have a clear exit strategy, price
Right.
wise.
However, if you think about it, the Wynn Casino, the other casinos, they're in business, so um, they know that every day that do they cry, when they lose a couple of grand? Oh, that hand, that person at blackjack just cost me, 5 grand, or whatever the case may be, right? No, it's a net gain strategy where, okay, we're going to lose on this side, but we're going to gain on that side. And I think the differentiation is whether it's investments or day trading, what is your criteria for getting into what you're getting into? And is there a probability of what you're doing will be in your favor, right? If you're just throwing, oh, I'm going to throw $100 on, red 13, right? That's gambling, right? Still probability, but from a trading perspective, whether it be investing or day trading, what is your criteria and what is your technical analysis? For example, Today, NASDAQ, if you looked at it, it's at an all-time high, right? Everything was overbought. It was from my recollection, price was below the 800 exponential moving average, the 200 exponential moving average, and the 50. There was a high propensity for it to break after it swept liquidity, right? So when that news came out, it dumped and it dumped hard, right? So what did it want to do? It wanted to go back down to where it was at yesterday. So that's an example of, okay, this is the criteria of why I'm getting into a trade. Now, if it went above the 800, Julie's out, right? The 800 exponential moving average. So that's an example. But I think that there's a general perception out there that day trading is gambling. And I don't necessarily disagree with that, but it's within the context of the person that you're speaking with and speaking to.
Gotcha. Well, there's a quote from Robert Kiyosaki in his book. I think it was Rich Dad's Guide to Investing. And he mentioned that, there's three types of people in the market when it comes to the stock market in general, whether it be trading or investing. There's gamblers, speculators, and investors.
Mm-hmm.
And you should be aware that those are the three types of people that are in the market. And you want to make sure you fall in the investor category. But in order for you to fall in that category, you need to be well educated on what you're doing, have an exit strategy, and really think it through, right?
Right. Yeah, I have not read the book, but I would agree. I mean, with that book. So.
And y'all probably saw me fumbling with my bookshelf. I was actually we were talking about dividends, so I had to shout this out. But it's called The Ultimate Dividend Playbook by Josh Peters. It's actually the best book I've read when it comes to finding out how to analyze a stock based on the dividend that it pays, a dividend safety drill to ensure that it's not going to be cut. And if a cut is coming down the line, how to exit. Highly recommend that book if you're really into dividend investing. But with everything you said, Julie, was awesome. But I do feel like some of the terms you use, I'm familiar with them, but the audience might be like, hey, but y'all are speaking a foreign language. Like, what the hell is an auction? They may not know that. So I think a great place to start would be, what would be some terms that if you're going to be getting involved in day trading, you really need to learn the definition of, like ASAP. Like, could you name like maybe 5 to 10 terms that a person should make an effort to learn like right now?
Yeah, options is really an advanced. So I would probably not go there. My number one thing, stop loss, risk to reward. So your stop loss is basically whether I'm investing or I'm day trading, if it gets to this level based on these operational assumptions, I'm out. I'm out of the trade. My take profit. This is where I plan on taking profit, right? Both investing and for day trading. And when it goes to my take profit, am I going to take all of it off the board, or am I going to only take my capital off the board? That's something important that you need to realize. Case in point, we talk about NVIDIA. I had it at 176. So that would have been, in today's price, $17, I believe. I believe so. And it got up to 300. And I thought, oh, it's at a 3-year high. It can't go any higher. I'm happy with my $10,000 reward, right? It went to $1,200. I missed out on $90,000. So what I would want your people to learn about is, because I thought, oh, it's going to retrace, right? 1 week after I sold it, they had their quarterly earnings, and they came out with something called AI, and it blew up the stock, right? And it never came back. So if you do participate in, buying and selling, and you want to get back into a stock, not only put your alert at where you'd want to buy it back at, but also put your alert at the top saying, hey, it's not coming back. You might want to get back in, right? Also, another term that I would learn off the bat is risk to reward. So risk to reward, I'm going to put, you always want a 1 to 2 or more risk to reward. So risk to reward means, okay, like for example, I am putting $50 on in the market, and I am expecting 100 in return. If I don't have a risk reward at least 1 to 2, I don't get in the trade. It's not a good trade for me. So you want to look at the risk to reward. Like today, NASDAQ for me went a 1 to 2, but unfortunately I didn't make the play, but some of my counterparts got a 1 to 8 today because I stayed in, and I was, super happy, grateful about, getting out and taking the money, right? My stepmom says, you know what, Julie, $20 is $20. So there's fear and greed. Then something else, it's not a term, but this is like a bonus. So there's fear and greed. How do I decide to get out? Right? Some people have a fear of getting in, and their markup's brilliant, right? But they don't get in, so they never participate. Some people, when they're in the trade, they get out quickly because they fear that the market will take back their money. So what I do is verbally out loud ask myself, do I want to get out of this trade? Is the market telling me to get out of this trade? Or do I just want take the money that I have and leave the market? I do that on every single trade, because it's really crazy that when you're in the zone, it's like you have these blinders on when you're trading, and it's so psychological that you not even internally say it, but out loud. Okay, Julie, you're up $1,000. All right. Do you see the market turning? No, everything's looking my direction. Okay, where do you think it could retrace? Okay, maybe I need to add to my position, right? Or am I super happy, grateful because it's a Friday and I don't want to watch the market all day? Do I just put a trail stop on, right? And a trail stop is basically you systemically have your stop in profit, and it'll go down. Well, in this case, it went down because I was a bear today. It goes down, and it follows it all the way down until the price action knocks out your price, or knocks out your position. So that's what I do. I ask myself verbally, because fear and greed, everything that we are taught, work hard, or if, like, for example, work hard for a good day's wage, right? Everything that we've learned, really trading turns that upside down. And that's why there's a lot of people that lose in the market, is because they're putting how they were raised, or, how they learned, their education, their background. They really try to work out the things that they have in their life through trading. Like, I be validated, right? I'm competitive. I want to be right. I'm not going to get out of this trade because I know it was right, right? So there are a lot of things that you have to be willing to put to the side as a trader, from a psychological and emotional perspective, to be successful. Saying, okay, I have a high probability I'm going to be right, but that doesn't mean I'm going to be right. For example.
Everything you mentioned, that sounds the exact opposite of being an employee once you think about it. Everything you just said, and we're mostly conditioned to be employees from the moment we go to school. Then some of us go to college, then we go to the work world, and we're an employee, and that's fine. But if you go into the world of day trading, you should be aware that it's mostly the opposite of what you've been conditioned to do. So you really need to keep that in mind and recognize that there's an emotional change that needs to happen, and when it needs to happen, don't fight it.
Absolutely. And those 3 books that I recommended will absolutely help you all to do that. Yeah.
Okay. Yeah, that makes sense. So real quick, y'all, we're going to take a quick break. because I do want to play something since we are talking about finances, especially since we're streaming this on Financial Anatomy. We're going to take a small break, but not, y'all don't go anywhere.
Is your fear of personal finance holding you back from going after what you want? What if I told you there was a way to get rid of your insecurities? Every person has their own way of making money, budgeting style, and a way of spending money. The key to financial success is the ability to use the right styles for you that ensure success. So rather than making you focus on avoiding your emotions, this book focuses on empowering them and using them to achieve what you want. Learn how to build and increase the income streams you desire. Understand how to budget your money in a way that you are always moving forward financially. Know how to remove the stress from spending money by knowing what works best for your personality. Learn methods to effectively evaluate a financial opportunity within minutes to see if it's right for you. The Anatomy of Financial Success, the key to building financial confidence and destroying insecurities about money. Buy now. Available in ebook, audiobook, and paperback.
Okay, y'all. What y'all just saw was my book called The Anatomy of Financial Success. If you're looking to really master the art of using your personality to your advantage, not having to overcome things and change yourself when it comes to making money, investing, ironically, like what we're talking about, and as well as a few other things financially, like budgeting, you want to pick that book up. The link is in the description. So, with that being said, Julie, I would ask, since day trading can be very dynamic, there's probably a different strategy that you'll use in a bear market versus when a bull market is happening. So using a bear market, for example, if you know there's a bear market going on, what's the tactic or strategy that you would use day trading wise to adapt to that market?
Well, actually, I use the same for a bear or bull market. It's really, is it a consolidating market or is it a trending market? And consolidation, so we all know that bear is on the way down, right? And bulls are on the way up. But consolidating means that it's range bound. And you can think of it like a 2-story house or a 3-story house. So when I'm on the first floor, I look up and there's a ceiling, right? That's resistance. I walk up to the second floor. I look down, that's the floor. But if I was on the first floor, that would be resistance, right? So it ranges. So it's interesting that it goes up and down. So people would use on like a ranging market would use support and resistance, right? They use liquidity zones, fair value gap, and all that is fancy for if you look at the candles and there is a gap in the price between one candle and the other, where could price go to? Like, for example, yesterday NASDAQ swept down. Well, they left some liquidity there. So obviously today they wanted to go back and snag it. The market loves to do that, right? It always loves to do that. However, like for example, in a bull or bear market, either or, right? If it is a trending market, meaning, it's a slow grind up or it's a slow grind down for the day. I love to use exponential moving averages. All exponential moving averages are, if you hear somebody say, hey, I'm looking at a 50 exponential moving average, that just means that they took the last 50 candles. So you could be on the 1 minute. So that would be 50 minutes, or you could be on the 30-minute, which is the last 30, 50 candles of the 30 minutes. So that'd be actually 25 hours, right? And it gives you a trend line, right? So I trade exponential moving averages when it is a trending market. And I think the secret sauce, if you will, is identifying whether it's going to be a trending day or if it's going to be a ranging bound day. And usually the market likes to decide this around 9:30 to about 10:30 Central Standard Time. It loves to kind of play with everybody, and then it kind of decides, I was telling my friend Cherry today, I'm like, it looks like it's going to grind all the way down today. And that probably, and that's another interesting thing. When you talk to yourself, listen to yourself, because that would have probably been code for, hey, Julie, you might want to, the amount that you had on, you might have wanted kept a small little position and just trail stopped it all the way down to see what it's going to do. And sure enough, it did do that, right? But yeah, so it really depends if it's a trending, if it's trending, or if it's a consolidating or range bound is what they call it, also a market.
Wow, you know what? So I would ask this then as a follow-up question.
Okay.
It sounds like the trending and consolidating aspect of it is more vital for you as a sniper, since you're in the market for the most short term. But would you say that for the other categories of traders, the other two categories you mentioned earlier in the show, that that aspect doesn't matter as much for them? And for them, it would be more closer to like, what is the overall market doing in terms of bear and bull? Or would you say that that's a fallacy?
I wouldn't say necessarily it's a fallacy, but I think you can use what I just gave for any whether it be an intraday trader, a swing trader, or a sniper. So you can go to the hour chart, the 30-minute chart, and you can see the same idea, whether it's going to be range bound or it's going to be trending. So I would think that you can use that for either of those. I think what you need to recognize from a bull or bear is a change in structure. And that's something that you would learn early on. And basically, if you look at a chart, any chart, that the chart inherently has a structural change based on the price action. So for example, I have to look at my notes real quick because I always say them backwards. So you can actually look at a change in structure. So it actually makes a WVVM for a bull. Okay, so if you look at the chart, it actually goes W, and then it'll make a V and a V and then an M, right?
Mm-hmm.
And then the change in structure for a bear is that M up here turns into an A, into another A, and then a W. So you can look at that like on a 30-minute, hour, daily. Go to NASDAQ, and if you look at it today, you can see the outline of an M, an A, and an A. So yeah, it's very interesting, but you can actually see a change in structure. But if you look at a daily position, we're definitely still in a bull market. The question becomes, when does it come out of a bull market? And you know that when there is a change in structure. So depending on if you're an investor, a swing trader, intraday trader, or a scalper, you can look at those change of structures to understand what is happening with the indices, gold, your individual stock that you're looking at. You can actually do that.
Gotcha. And that's why it's so important to decide which one of those three you're going to be. Because, it seemed like you want to say something. Go ahead.
Oh, I do. No, it's not about that. It's about who you inherently are as a person. So
Okay. So it's more akin to a personality type.
Absolutely. Absolutely.
Gotcha.
And I've been
Okay.
doing better. I hold my trades for a couple of hours now. But I'm trying, but it's akin to who you are as a person, right? And
Okay. Your emotional strengths and weaknesses, like that's okay.
absolutely, it has nothing to do with the charts. Nothing to do with the charts. It has everything to do with your emotional, the way you are emotionally and how you're, creatively designed, right? It has everything to do with that, not anything to do with the charts. your fortitude on what you can stand, like the examples I gave earlier about, I could never stay in a stock or investments. Yes. But trading, absolutely not. I mean, if you looked last Sunday, or was it Sunday before last, remember when China came out with, oh, we have an AI, and the market on Sunday
Lost their damn mind.
but guess what? It came back up to structure. It just came back up because, you know what? How is Asia going to monetize that? You know, how is China AI going to monetize that? Microsoft is monetizing their AI. So that was, buy the rumor, sell the news. That was sell the rumor, buy the news, right? So that's an example of why I wouldn't want it. But there are people on the opposite side of that would be like, I could never do what you do, Julie. That's just nuts. I mean, 2 minutes, 5 minutes. I mean, oh my goodness, it's frazzled. But we all are unique and designed differently, right? So you do what fits with your emotional profile.
Okay. So it seems like the strongest advice you could give to an up and coming day trader is to find out which one of those three you are as soon as possible, because that kind of serves as a foundation. So what advice would you give for someone to find out which one of the three that they are? Like, hey, well, I know I'm a sniper, but I found out because of, this, or
You know what? I would just watch the charts, and you can get a demo account, and you know what gives you angst, right? You're an investor, it gives you angst, Elijah, right? So that's
right.
what I would recommend.
So once they have the context of what the three are, just get your feet wet and you'll be able to feel what gives you anxiety versus things you're more emotionally conditioned to deal with. Like, oh, well, I have a strong emotional threshold for this, but
Right.
this gives me anxiety. Well, where does that put me in those three? Oh, I see. I'm this. Okay.
Exactly. And that takes time, right? That
Yeah.
takes some time. So I think if somebody came to me early on when I was learning this craft, I would do this in demo, right? You can
No,
go
you're the opposite of Theo. Theo said, "Hey, don't play with fake money. Put some money in there. Like, it doesn't have to be that much, but like, you need some skin in the game for it to absorb."
it is different. It is different, but I think what happens with new traders is, yeah, you definitely need skin in the game, but there's not just over trading and not putting stop losses in, but then there's something called revenge trading. Oh, I'm down $500. Well, let me try to get it back, right?
That sounds like an aspect of a gambler.
Absolutely, absolutely, and knowing
Like
when
I'm
to
hitting
stop.
the Vegas slot machines. Like, I keep
Yep,
losing. I have a sunken cost fallacy. I need to get this back. You just keep getting more and more
absolutely.
and more.
Absolutely. And it's really difficult in a market where you're conditioned like I was, I making $1,000 to $5,000 a day back in 2021 and losing. I'll be very real. I lost $30,000
Oh,
in some trades, and I thought I was that good that it took me all day and I came back to zero. So there are traders out there, like one good trade. Some people would liken that to gambling and stopping, but I know I can get it back, with my technical analysis versus someone that doesn't know what they're doing, puts it out there and said, okay, I'm going to, try to, win it back. But again, it goes back to emotional fortitude, emotional psychology, because even I can have that. I can even have that thing where, oh, I'm going to get it back and then try to get back, but it has nothing to do with technical analysis. And you can get your butt handed to you. Right. And
mhm.
I mean, that's one of the reasons why I wanted to come on your streaming is, the real things, because, on social media and, on the channels, and, everybody talks, high fives and wins and, oh, we won, and have I made, I've had a couple of days where I've made $30,000 to $60,000 in one day. It happens a couple of times a year, right? I've had those days. I've been there, but on average, is that realistic for someone that's starting out? I had a VP told me, you know what, Julie, every blind pig can get a kernel of corn on the ground every once in a while, right? And that's what I liken it to. Yeah, you're gonna have those kind of days, but is that an average? Is it possible through day trading to make $200 to $1,000 a day? Absolutely, with proper risk management. And that's another thing is you risk 0.5%, you secure 1%, and you target 2%. So in my trading plan that I have written down, I risk 0.5%, I secure 1%, and I target 2%. And when that happens, I'm done. But I agree with what Theo's saying, but again, I don't, because I really think if somebody has a couple of $100, it's hard to flip. You see these people on social media where they think that they can flip. Well, they have done it. I've seen it being done, flip a $200 account into a $1,000 account. But, that takes skill and, people that have been at trading for a little bit longer than I. So, but yeah, there are other things out there like prop firms, for example. So I mentioned that I don't put my real money. I invest my money. I am on a prop firm. You got to be careful because there are some shady, there are bad actors out there. So you want to make sure that if you use a prop firm that, they're paying out and they're reputable, right? If you're not in the US, FTMO, not to plug, but I was on FTMO before
actually, that's the good tie-in, because I do want to let everyone know that if you have any questions or comments, then now would be the time to drop them in the chat. Because in a little bit, we will start winding down. Okay. But I was going to ask you, it sounds like you're about to go into like the platforms, because obviously you need a platform in order to do any kind of day trading, right?
That is correct. So I used to trade my own money, and now I just reserve it for investments. But prop firms are basically this. They have you pay money for a challenge. So I'm going to give you an example. A $200,000 challenge will probably run you anywhere from $1,400 to $1,800, depending on if they let you hold it for weekends, you get to trade news, etc. You exercise proper risk management, so you don't lose more than 5% in a day, or you don't lose more than 10% in the overall challenge. They give you a funded account. So once you pass the challenge, you get a funded account. And so, for example, I have a funded account where I get 90% of everything I make. Now you're like, okay, Julie, how do they make their money? Well, there's two types of prop firms. One prop firm, remember, you paid for a challenge. Well, they're hoping you blow the challenge, right? They keep your money. Okay. That's one type. The other type of prop firm, it's a tier 2 prop firm. They basically take your money. They refund it to you once you get funded, right? But what they do is that they copy your trades in the real market. So prop firms are in simulation. It's like playing a video game, right? I am not in the market when I am trading. I am playing a simulated video game. I guess you could say I'm a gamer. That's awesome. I just thought of that.
I don't see a reason why not.
Right. I'm going to add that to my resume. So, but that type of prop firm, actually, they know that you exercise proper risk management. You proved it to them. So they're willing to copy your trades out in the real market. And that's how they make their money. So, that is how I make my bread and butter. Now, the really cool thing that's changing in the industry is not the prop firm, but the educator platform that I'm going to, they actually give me a prop firm challenge, and I pay for the education. They give me the prop firm challenge. They connect it with their educators. So if you have a finger and a phone, I would show you my phone, but I'm on my phone because my trading laptop wouldn't stream for some reason. If you have a finger and a phone, you basically click the tap to trade. It puts their trades in. Yep, thank you, finger and a phone. It puts your trades in, or I'm sorry, not your trades, their trades in. They put the TP, they put the stop loss, they manage the trade. So they're managing trades for, I know we have 10,000 traders on the platform now. So they manage the trade. And you basically have the opportunity to earn while you learn, because it takes a good 6 months to 4 years to learn how to trade. So you can actually become funded while you're learning in the background and taking the educator's trades. So that's what's so dynamic about this industry, where it's moving towards.
Okay. Yeah. So it's very interesting because, like I said, I have limited knowledge on the trading aspect. I have knowledge on investing, but and we might, I guess we probably have a different of opinion there. I kind of put them in two different categories, but ultimately they are in the same category. So it really depends on how you look at it.
We're
But
all
yeah,
trying to make money.
right.
Or as the young people say, we're all trying to make stacks.
Yeah, I'll take that. I like the stacks better because stacks is just a bunch of money.
I'll take those stacks, or or as my dad would say, a stack of $100 bills. I'm like, yeah, I'll take that too. It doesn't matter. As long as we're meeting each other at the bank, I don't care what we do.
Right. We could trade stories while we're waiting to deposit our money, right?
Absolutely.
Okay, Julie. So for people who want to get more of you, feel free to drop your social media or your website, or any place where you want the audience to go to if they want to hear more from you or get more of your expertise.
Okay. I don't know how to do that on the platform
Well, your link tree will be linked in the description, but there's
guess what? All of that's my link tree. So my social media, my YouTube. You want me to see me swim with sharks? That's there too. The Akashics app, or the Akashics platform that I'm going to, that is there as well. If you want to learn how, or just reach out to me and I'll help. But regardless of what you do, if anybody ever needs any help, I'm always here to help. So I wrote on a piece of paper back in the day, if education and money weren't an issue, what would I want to do with my life? And one of them was disaster recovery. I'm huge into disaster recovery, right? I've been to Haiti. I've been, the Rowlett tornadoes. That's what I do. That's what I'm passionate about, right? The other is diving. I'm an avid scuba diver. And the last one is helping people, serving people. So if I can ever help anybody, whether it be trading or financial planning or disaster recovery or anything, I don't know. You might just say, hey, Julie, does this, should I wear this? I'm probably not the person to ask on that, but if anybody ever needs anything, I'm always here to help, because that's my passion, to help people. And I want people to be successful in whatever, venture they do.
Okay. I do have one final question. And
Okay.
some people have probably been wondering this, but what does the day of a day trader look like in the everyday? Like, you wake up, you have your coffee or breakfast or whatever. Well, I might be wrong. What happens from the moment you wake up to when you go to sleep? What does the life of a day trader look like? I know that can vary depending on which one of the three that you told us about. But let's go with your personality. Let's go with the sniper.
You know what? Actually, it doesn't, because if you set alerts as a swing trader or an intraday trader, you don't have to be in front of your computer. And I would have to a tad disagree with Theo on you sitting
Oh, no,
for
no need to be so reserved about
8
it.
hours a
You can just
day. Are
disagree.
you kidding me? I was like, oh no. We don't do that, right?
But can you say that again? Because we were both talking, so I don't think the audience caught it.
Oh, I would have. I'm sorry. The screen froze. I would have to constructively disagree with Theo. Theo, if you're listening, we can have a discussion over this. But you sit in front of your computer for 8 hours a day, 10 hours. Are you kidding me? We don't do that. I mean, sometimes I will do that, but that is not the regular operating procedure, right? For swing traders and for intraday traders, they put alerts in. So if my setup happens, if I'm an intraday and I'm a swing trader and my alert happens, that's when I go in on my phone or on my tablet or my laptop or wherever I'm at and put in the trade, right? So going back to it, I don't think it's different, right? I can tell you what I do. I wake up, I check to see if I missed any tap to trades, and then I'm like, okay, I missed some. I check the news. I have a cup of tea. I work. Well, before that, I work out, and then I'm basically on from about 8:15 to 10:30, 11 o'clock in the morning. And after that, like today, I went and played pickleball. And I played for a couple of hours, and then or I volunteer. I clean the Dallas Children's Aquarium sometimes on Fridays in the tank with the sharks. Remember the shark thing? So I do that, but I do not sit in front of a computer for 8-10 hours. Now, will Julie come back for Jerome Powell's FOMC meeting minutes that happens once every month? Absolutely. I am glued in front of my screen for maybe 30, 45 minutes one day a month. But I typically work from 8:15 to 10. But here's the thing. Let's say that you're still in corporate America and you can't be in front of a screen at 8:15 to 10, right? There's the Asia market. There's the London market, right?
Oh.
So there are possibilities. You might not be able to trade NASDAQ, but guess what? I know like Forex pairs and gold moves during the London session, moves during the Asia session. So there is possibilities to work around your schedule if you're so inclined.
The stock market is bigger than the U.S., right?
Yes, yes, it is. And a lot of the Forex pairs move, like we call it GJ. So the British pound and Japanese yen. Guess what? That moves during London, right? So there's a little ability. There's ability to gain something from any market depending on your schedule. But I will close with this. There's a picture on my Telegram, Trading with Emotional Intelligence, and it's a picture of a remora attached to a shark. Retail traders do not move the market. I do not move the market. Theo may move it a tad, right? But us collectively, we don't move the market. I'm a remora. I'm attached to the shark, and the shark's going one direction. I'm going with it, and it's beneficial, right? I get transportation. I get a little meal off the shark. Whatever he has left, and the shark likes it. Well, except for lemon sharks, they hate remoras and eat them. And sometimes you do get eaten by sharks, right? But my point is that what we're trying to accomplish to change lives and to change our family tree, it can be done through day trading with emotional intelligence.
Okay.
So a remora, not a shark.
I think that's the great place to end off. Julie, I want to thank you for coming on to the Southwestern Society and also Financial Anatomy for this Financial Freedom Friday. I don't see any other questions in the chat, but if y'all have any additional questions, feel free to drop them in the comment section. Don't forget to subscribe if you're new, whether you're on Financial Anatomy or the Side Hustler Society. Check out Julie's links. They'll be linked in the description. And of course, if you can give us a thumbs up for the YouTube algorithm, that's greatly appreciated. With that being said, we're going to go ahead and hop off. But y'all enjoy the rest of your day. For Financial Anatomy, don't forget to get out there and take control of your financial destiny. For the Side Hustler Society, I always say be safe and be profitable, everyone. And we'll catch you in the next video.
I'm so proud of you. Congratulations.
Much appreciated.
Yeah.